Uranium Battle Royale. There are decades where nothing happens, and there are weeks where decades happen. That's a famous quote attributed to Vladimir Lenin. The other yellow metal has been on a wild ride the past 2 months, and the price appreciation of the uranium, the actual metal, has carried a lot of uranium company share prices with it. One of the Katusa stocks is up as much as 1,500%. And the Katusa subscribers to the Katusa Resource Opportunities were mentioned this stock before its big run. Here's why. Uranium on the spot market finally crossed $50 per pound hurdle for the first time since 2012. The uranium ATM machine has awoken the sector. The Sprott Physical Uranium Trust, the SPUT, has given the whole sector a giant wake-up call. The Sprott Uranium Trust is a publicly traded investment trust, which is a buyer and holder of physical uranium. You can think of it like the GLD ETF in the US, which provides investors exposure to physical gold without having to store the gold yourself. The SPUT Uranium Trust provides passive exposure to physical uranium. It provides a way for generalist fund managers and investors to gain exposure to uranium price movements without having to buy a miner in the uranium or exploration and all that extra risk that comes with that. Through a technique called at the market, ATM, facility, the company conducts unit issuances on demand, meaning if a family office or a large buyer wants to buy 1 million units of the SPUT, these units can be created and sold to the investor directly into the market. The family office gets $1 million worth of SPUT units and the cash goes to buy more uranium from the Sprott side. Transactions are done at or above NAV, so there's no dilution to current owners of the trust. The ATM facility can be done up to 1 times NAV of the trust. With the current NAV of the trust around $1 billion, it means that the trust can issue up to $1 billion in new trust units. Since the ATM program began in late August, the trust has taken in nearly $900 million and purchased over 15 million pounds of uranium from the spot market during that time. So what you're looking at right now is a chart which tracks the daily activities of the chart. So we can link the uranium price to the trust. So that's what we did in this next chart. It shows the price impact created through this buying activity. As you can see, the Sprott Uranium Trust has sent the price of uranium up 65% or 17 pounds higher by clearing out the excess spot market inventory. Now Sprott will have competition from the UK. Now, it's not new competition, but it did rattle those at Yellowcake Uranium, which is in London, England, has announced intentions to purchase 3 million pounds of uranium in the market. 1 million of those pounds come from Kazatomprom at $47.58 per pound, and 2 million pounds will come from Curzon, an intermediate at $46.32 per pound. Now, if you're wondering if Curzon is the Frank Curzio uranium company, there may be some truth to that rumor. I don't know, and I'm not sure I believe it, but some have been saying that that's Frank Curzio's vehicle. The current uranium spot price is around $47.25 per pound. Math matters. The Sprott Trust raised about $725 million thus far, and that all went into the spot market. And the irony of all this is $725 million of spot market buying has increased the sector. So you take up all the market caps, combine them by 18 billion. That's a 25 multiple. Talk about a return on investment. So the uranium stocks are up an 18 billion and the multiple up 25 on the 725 invested. And that's what we're showing in this chart right now. The circle dash shows when the Sprott started buying uranium, that's $725 million. And that gold line shows if you add up all the market caps of the uranium companies in the sector, they've increased by 18 billion. Taking this one step further, we can see the direct impact this is having on uranium stocks. So let's chart it out. The sector average return is in black. And of course, I like to compete myself to everyone else. So that's the index, the black line. And there we are, the KROs and the gold line. I love outperforming my peers. 2 years, 700% gains, uranium price history. Uranium has had a very dark decade post-Fukushima in early 2011. In 2019, the KRO, the Katusa Resource Opportunity, started making noise by backing the first royalty and streaming uranium company in the world. We followed up with publishing a faux short report, as I called it, for uranium, showing that we do the work for the shorts. Since they struggle, why not write a report to show the worst light possible of the sector, make it as negative as possible, throw all the numbers negatively at it, and if you could figure out a company that could still make money in that framework, in that environment, then imagine if it's a good uranium market, how well you will do. That was our whole thesis. And if there was a way to still make money in that scenario, what kind of company would you want to own? It's ironic how many people didn't actually read the report in 2019 and only cut out and sent along the short report part. I got incredible amounts of hate email because it was seen as, oh, Katusa's anti-uranium or Marin's gone to the dark side. Nothing could have been further from the truth. And all those who spread that false message should be avoided. That's the beauty of the internet. The irony of that was at that time in 2019, I was the largest financier of uranium globally. After publishing that report, I personally backstopped the pre-IPO and the IPO financing, which happened to be the largest IPO of the year for mining in the world that year. Katusa subscribers got in at the same time and at the same price alongside myself. There were about 18 months where nothing happened with the share price. COVID happened, the price went up and down, but generally speaking, the share price didn't do much. But lots was going on with the company, and I was very bullish as I updated all my subscribers on why. Within the span of a few weeks, everything changed. Investors were piling into uranium. Wall Street bets and Reddit were on fire with uranium short squeeze posts. Twitter and YouTube's algorithms were full of uranium news and alerts, filling up everyone's feed. The bullet train was on, out of nowhere. Or was it? Not really if you were prepared. Remember, luck is being prepared when the opportunity presents itself. And we were prepared. Hence, some would say we were lucky. Subscribers who invested alongside me in the IPO are up over 700% in 2 years. Year to date, the warrants which came for free in the IPO are up a staggering 1,500%. That's 15 times price appreciation. Deals like this are the definition of the Katusa advantage and what it's all about being an alligator. Now, on a total side note, I want to thank all of you that wrote in with kind words and comments on the gains, and some of them were absolutely extraordinary, on the gains you made on the uranium stocks we profiled in the newsletter. Those words, those messages, those thoughts are exactly what gets me fired up to find the next big idea and research until the late hours of the night. Back to our message. The potential black swan. Winter is coming. I think Europe could have a very cold winter, and with that, reliance on Russian reliable and cheap natural gas will be at the forefront. Boris Johnson, the Prime Minister of the UK, has promised the UK citizens he will keep the lights on this winter. Hopefully it's not with candles. We all know what happens when society must depend on a politician. The answer? Nothing good. Putin will do what Putin does and optimize this need for natural gas with political leverage. He's a master at it. I wrote about it in my first book, which was a New York Times bestseller in 2014, called The Colder War. But the nuclear utilities will take notice if this happens and will pay up to the Kazakhs' demands. Remember, Kazatomprom produces 40% of the world's primary uranium production. That means if you took equivalent all of OPEC and Russia on a percentage terms of oil production, Kazakh uranium producer produces more on a uranium relative basis annually than all of OPEC and Russia combined in an oil perspective. Europe could get hit with a cold winter and very high electrical prices. And this would be the ideal framework for the Kazakhs to ask high price for their long-term supply of uranium. If you own shares in the best uranium companies, you're prepared for what's coming. If you don't, Then consider becoming a subscriber to the Katusa Resource Opportunities to get the names of our favorite uranium stocks that I'm holding for a bull market run that were just started in the early innings. After a dormant few years, I think the fun is just getting started. Stay safe. Subscribe to the KRO, which is the Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.